The 13F filings have now been released. In this video, we will examine the 5 stocks that have been purchased the most by a group of successful investors during the third quarter of 2022. This quarter saw significant volatility in the stock market, with the S&P 500 both gaining and losing a significant amount. Many well-known companies such as Apple, Amazon, Google, Microsoft, and Tesla also saw fluctuations in their stock prices. Given this volatility, it is interesting to see what businesses caught the attention of these investors. We will begin by quickly going through stocks ranked 10 to 6, and then we will spend more time discussing the top 5. The 10th most popular stock among these investors was Micron, a large American producer of computer memory and data storage. Currently, there is a significant shift happening in the consumer electronics industry, as businesses are reducing their profit forecasts and causing turmoil in stock prices in this sector. If we look at Micron's stock price from the beginning of the year until the end of the third quarter, we can see that it has essentially been cut in half. It is likely that many value investors see long-term potential in this stock, including Mohnish Pabrai, Lilu, Guy Spier, and Seth Klarman. Next up, coming in at number 9 is Disney. This stock has also been performing poorly this year, but its park segment has continued to improve post-COVID, and the company has gained a large number of subscribers for Disney+, which is expected to be its main source of growth for the next 5 years. Overall, Disney is a diversified and proven business model, and it seems that these super investors are attracted to it, especially as the stock price has dropped almost 40% from its peak this year. At number 8, we have PayPal, a dominant player in the online payments industry. By September, PayPal had captured 41% of the online payment market, with its stock price returning to levels not seen since the market crash of 2020. It is possible that some of the successful investors see this as a long-term opportunity. The 7th most popular stock among these investors was Salesforce, a company that provides a well-known customer relationship management platform. Despite a 43% drop in its stock price from the start of the year until the end of the third quarter, not much information is available on this stock. The 6th most bought stock was Booking Holdings, a collection of travel-related businesses including Booking.com, Priceline.com, Kayak, Agoda, Rentalcars.com, and OpenTable. These businesses have been greatly affected by the pandemic, but as the world begins to reopen, some investors may be starting to see value in this industry again. This stock was also popular in the second quarter, with 8 successful investors purchasing it, and the same occurred in the third quarter. This is not surprising, as the stock trended downwards in the third quarter compared to the second quarter. The 5th most popular stock among these investors in the third quarter was Visa. Visa is known for its strong moat and network effect, allowing it to collect tolls as the world's leading payment facilitator. Every time a card is used at a store, Visa connects the store's bank with the cardholder's bank to facilitate the transfer of money. Visa facilitates payments efficiently, accurately, and securely, and charges merchants a small fee for every transaction it processes. While this fee may seem insignificant, it adds up quickly. In the 12 months ending September 30th, 2022, Visa processed 192.5 billion transactions. It holds approximately a 50% market share by purchase volume, with MasterCard at 23% and American Express at 19%. Visa has a slightly lower price-to-earnings ratio compared to its competitors and is slightly undervalued based on a discounted cash flow analysis. Additionally, its stock price dropped 18% in the third quarter, leading some successful investors to see this as a buying opportunity. Amazon is the 4th most popular stock among these investors in the third quarter. Despite the belief that Amazon's stock was declining, the company is actually going through a difficult period. Its stock price has eliminated all of the gains it saw during the pandemic shutdowns and is now down around 50% for the year. This can be attributed to Amazon investing approximately $60 billion per year in expanding its capacity and roughly doubling its revenue since 2020, but consumers currently having less discretionary income due to the ending of stimulus payments and rising interest rates. As a result, despite higher revenues, the cost of goods sold, operating expenses, and headcounts are higher, and ultimately, net income and free cash flow are all lower. There is concern in the media that Amazon may announce layoffs, causing its stock price to drop, but it is still a strong company. Its performance is largely influenced by the current economic climate and consumer spending. Despite this, 11 of the successful investors purchased more of Amazon's stock in the third quarter. There is currently a solid margin of safety for Amazon based on a discounted cash flow analysis. This does not necessarily mean that it is a good investment, but it may be worth doing more research on the company as it may present an opportunity. Meta, the third most popular stock among these investors, was added to by 13 investors in the third quarter. This is not surprising, as the stock fell 15% in the third quarter and was also popular in the first and second quarters. Meta is a company with a strong moat and large network effect, but its business has changed significantly in recent years. Previously, it was a simple low-cost company that made money by displaying ads on its apps. However, with the current economic environment, major advertisers have reduced their budgets, and Meta's business has become more complex. Meta saw an 18% year-over-year reduction in the price per ad in the third quarter, and has also been spending a lot of money on metaverse development, leading to lower profits. In the third quarter, research and development expenses rose to $9.1 billion, while revenue decreased, resulting in $4.4 billion in net income, compared to $9.1 billion in the third quarter of 2021. This, combined with weak fourth quarter guidance, has caused the stock to continue falling into the fourth quarter. Despite this, 13 successful investors still purchased Meta's stock in the third quarter. Meta has a low price-to-earnings ratio of 10.3 and a healthy margin of safety based on a discounted cash flow analysis. The second most popular stock among these investors in the third quarter was Microsoft. Microsoft's stock ended the quarter down 10%, but it is a company with a wide moat and various products for both business-to-business and business-to-consumer markets. Microsoft has three revenue segments: productivity and business processes, intelligent, and personal computing, such as Xbox. Microsoft and Google were popular choices among these investors in the third quarter. Microsoft's cloud segment has been performing well, while its personal computing segment has slowed, likely due to the current economic environment and consumers having less disposable income. Despite its stock falling 28% year-to-date, Microsoft's strong presence in software and cloud has attracted long-term-minded investors. Google's stock also became cheaper during the quarter, and the company is known for its strong balance sheet, minimal debt, and dominant position in online search and digital advertising. It has consistently increased revenue, earnings per share, equity, and free cash flow over the past 5 years, and has maintained a high return on investor capital. It is considered a reliable and stable business. Google was the most popular stock among these investors in the third quarter, with 9 purchasing the Class C shares and 12 purchasing the Class A shares. This is not surprising, as the stock became cheaper during the quarter and is usually a popular choice among these investors. Its revenue has grown by 24% annually and earnings per share by 46% annually over the past 5 years. It has also increased equity by 13% and free cash flow by 23%. The company has maintained an average return on investor capital of 18% over the past 5 years and has effectively managed its debt. Overall, Google is a solid business. During the third quarter of 2022, the 5 most bought stocks by a group of super investors were Micron, Disney, PayPal, Salesforce, and Booking Holdings. These stocks were popular due to their potential for long-term growth, despite experiencing difficulties and volatility in the current market. Microsoft and Google were also popular choices, with Microsoft's strong performance in the cloud segment and Google's strong balance sheet and dominance in online search and digital advertising contributing to their appeal. Super investors may have also been attracted to these stocks due to their discounted prices and the potential for growth in the future. Thanks for watching. I'll see you in the next one.